What's up, guys? This is Growing Wealth. My name's Trey Carter, and we got another video for you guys today because right now, currently in the stock market today, we have a couple diamonds in the rough, but we have a lot of fair valuations out there right now. What I mean by that is that when I'm looking at the landscape of what the stock market is and what the prices are at right now for some companies that I've taken the time to look into and do a lot of research of, there's not a lot out there right now that I'm looking to plow a lot of money into. With that being said, though, there are a couple we're looking at nibbling at. If you look at some of our past videos, for example, we've got Activision Blizzard is one stock that we're currently nibbling at right now. We currently own very few shares. We're sitting around 5 at this point. Anything under $55, we end up buying a little onesie, twosie. The reason for that is because we're trying to build the cash position, preparing for 2020, a lot bigger, right? Not that I believe we're going to get a recession or anything of that nature. When you look, though, at 2019 with where it's at as a whole and how much it's climbed and what it's done and where some of these companies are at, I do feel like that we're going to get one or two, maybe even three corrections sometime next year. Now, I'm not saying that's like a fortune teller thing, like, oh, it's going to happen. But it's one of those things, like when I was listening to Jeremy, which he runs a financial education channel, it made a lot of sense. He talked about that if 2020 is a massive blow-up year and we really don't get much of a pullback, then 2021 is something you really got to be concerned and scared about, because that's when those valuations are going to get pretty over the hill and pretty scary, right? So I think at this point right now, we're going to be nibbling on some stocks, maybe buying one or two Activision shares. Currently, with where Tesla's at right now, we're a big believer in Tesla, and I think Tesla's going to be one of those milestone stocks that will help propel our total portfolio value and net worth through the roof. I firmly believe that. I think that's going to be one of our big ones that's going to do a lot for us. So now, in different companies, like for example, like Facebook, Apple, Microsoft, and you've got all the other big ones like Google and Amazon. Actually, minus Amazon, our Roth 401k covers all of those in the mutual funds that we currently have, which I think would be pretty fun to cover at one point, because you guys said those mutual funds are absolutely slaying it in our Roth 401k. So anytime I see Facebook doing really good, Apple doing good, which is like right now, and Microsoft, it's been pretty exciting to watch that 401k grow as much as it has, because it's been another really good year for our 401k. So what we really work with the Robinhood account, for example, with their individual stock choices, is not necessarily to diversify, but that it's those individual companies that we spend a lot of time, that we know the product, we have a good idea of where it's going, looking at its financials, and being really able to lean into that one stock, that one company, to get true ownership of them. Because when you look at a mutual fund, like, it's spread out through quite a bit. So it's like you may like Apple, but you've got some of these other companies in there too, which isn't bad. Like, for example, Alibaba being in one of our mutual funds, like, is good. It's a good Chinese company. Like, it's got a lot of good potential. But the other thing is, like, it allows us with Robinhood to really lean into some of these stocks. And currently right now, the two that we're in is Tesla and Activision Blizzard. Right now on Tesla, we have about 22 shares, which I really like to build that up to over a period of time, getting it maybe to 40 or 50, which is realistically, I know for sure we'll be able to get it to 30, but there's going to be a point in time when it gets over that $400 mark. Now, I feel like it's going to get much more above. I'm looking at Tesla as potentially one of those stocks that will be over $1,000 a share. You heard me right. $1,000 per share, right? That's just my baseline thesis of what I think that company can do over time. But this is one of those things that this is a 4 to 5 year, maybe 7 year type thing that we're going to have to wait to see and how it plays out. Who knows? Elon may tweet out again about 420 again. Let's hope that does not happen, right? But the other thing is with also Activision. Activision right now is a company that's been anywhere upwards of $80+. Now they dropped down to about the $45 range, and now they're sitting around the 54, 55 range. But this is a company that's made different cutbacks, different changes, and they announced with different IPs that they have, with games that they have coming out, that 2020 looks like it's going to be a very strong, good year. They actually just released Hearthstone, the new expansion, today. So I myself, being an actual user of that product, got to enjoy opening the brand new cards that came with that as well. So Activision is one of those companies that over a period of time I'm going to continue to buy, continue to be involved in, especially as we go into January and wrapping up the fourth quarter. So it's one of those things we're going to build that position over time. But there are other companies, for example, like iRobot, which is doing very well. It's just being held back by the trade situation that's going on with China, with the trade dispute that's going on between the U.S. and China. Now they're looking to move some of that the actual production of the vacuums and obviously mower systems that they have over into different places. I believe, if I remember correctly, it's like Taiwan and different places like that. So it helps them avoid those tariffs that are actually being placed on their products. And there are other companies too I'd really like to look into more. I know Uber is one of them. That's a real big one out there. There's just different things about Uber that has me, I don't want to say skittish, but not 100% into putting my money in that. Because you got to remember, like, with whatever we put into Robinhood and we invest into that company, we're buying that thing for 4 to 5 years. Plain and simple. I mean, unless we, like, triple or double our money, like, then it could be a different thing. But we're not selling it to raise cash. And every dollar we put into Uber is a dollar that we can't put into Tesla. It's a dollar that I cannot put into Activision. It's a dollar that I cannot put into iRobot or some of these other companies that would be really good to be put into, right? ETFs are great, and I've seen a lot of people have success with them. I just view an ETF something like a mutual fund. It's a conglomerate of companies in there, and I already have that with our 401k, right? So at this point, we don't have an immense amount of money we're able to plow into the market. A lot of what we do is, like, for example, if I have $40 that we can put into it, we go to Ross, for example. We buy a $40 pair of shoes, sometimes a $30, and we go through eBay, look to see what isn't selling, and we literally flip that for sometimes it being twice to, over half the value of what it was. So we bought a $40 shoe, we sell it for 80 to 100, right? Depending upon, like, for example, if they're Nikes or not, because Nikes sell pretty darn easy. So instead of having $40 to invest, now we have 80. So that's the kind of whole idea of how we're pushing and raising money right now because, hey, I'm sure you can relate to this too. Things are pretty tight. But if you listen to different people like Gary Vaynerchuk, there's no excuses, right? So you hustle, you find a way. We've got our strategy about what we're doing. I'm so excited to share and document that journey as we do that. But right now, especially prepping for Robinhood to release their cash management account, which basically pays you 1.8% on your money that you have there available. We're going to start putting more and more cash into that. So we're actually sitting on cash as we wait for better prices with some of the companies that we believe in, so we can continue to invest into them with new positions or keep adding into current positions. But currently right now we're plowing everything into Ally Bank, which Ally Bank's really good. I think they pay like 1.79% on your money, or 7.6 or something of that nature. But either way, like it's not a bad interest rate. So we have some of our cash, which is our what we lean back on with our emergency fund. So we're earning a little bit of interest on there, and we really don't sit on any cash in Robinhood right now. But as we do get the cash management account stuff available to us through Robinhood, we will be having more cash actually sit there. And as we go into 2020, especially through the election that's going on, which is going to be something interesting to watch and go through, I really believe we're going to get some pretty healthy buying opportunities, especially if Trump can put through that trade deal between China and lift some of those tariffs. I think it's going to open a floodgate of the market to explode. If not, I think we're going to have some pullback, which is healthy and good. I don't think it's a bad thing, which is to where, like, I've heard some people like to sit anywhere from 10 to 30% cash. Currently right now we are probably pretty safe to say over half, or about 55% cash. Keep in mind, I include that with our emergency fund as well. So whether some people just include what they're willing to invest or not, I include our cash with our emergency fund as well. So I'd like to build that up a little bit more as we prep for the next year. But currently right now, I'm hoping for Tesla stock not to jump up too high over the next little bit, because I'd like to add some more to it. But I don't know about you guys, it's an expensive company to be investing into. So definitely believe about its future, but it costs a pretty dollar. So anyways, guys, that's the outlook of what we're doing right now. We are looking to put as much cash as possible through retail arbitrage and selling different things we can find through eBay to help flip that, waiting for some better prices while nibbling on some Activision shares and some current things we currently already own right now. But anyways, guys, thank you so much for watching this video. If you made it this far, do not forget to follow, subscribe, all the above, whether you're on Facebook or YouTube. Don't forget to like it, comment, let me know what you are actually planning, even going into 2020, especially with the presidential election and all that fun stuff, how you feel it may impact the actual market. Anyways, guys, this is Growing Wealth. Good luck out there, and I hope you guys are having a great week. Peace.